We are live.
This is Market Week Live, September 5th, 2025. Information and support for traders and investors. Here we go. We have our full team here and so much to bring you today. I think you're going to absolutely love this show, which you see all of the analysis that we're going to share with you. This is what's coming up. We're going to do our express round. That's a Q&A with the askSlim analytical team. Our level 1 to 4 members are participants in this, and if you would like to participate, please do become a level 1 to 4 member. You can ask any questions on our services, trade planning, chart analysis, trading issues, just anything you want to ask. I'm the one that handles the questions on the futures, and the rest of the team handles the questions on individual stocks and ETFs, assuming we do follow those, and we have a ever expanding list of stocks that we do pay attention to. So we probably have what you're interested in, but you can post those up now in the Q&A for those people that are in our Zoom show right now. Matt's then going to bring you a review of our level 3 services that is really a special offer plus our day traders. So you're going to get to see both of those specials that we have right now. You're going to love what Matt brings you on that. And I'll give you a little peek at that a little later on in the show also as to how you could have used that this morning. And then I'm going to bring you analysis, some of the evidence, probabilistic projections in price and time. We'll look at SPX, NDX, RUT. Plus, I'm going to do a little cycle analysis lesson looking at the Dow Jones Transportation Average, give you a good sense at how we look at this multiple time frame analysis. And then, am I not sharing my screen?
Yeah, we just have to share that screen, Slim. But yeah, all good.
Wow. Okay, there we go. Thanks for that.
Yep.
All right. It's funny what happens when you get old. We're gonna then bring you all of this analysis that I just told you about, and we'll show you our MCM, which is the market condition monitor, which is just a great tool for you to use. So we have lots of great stuff coming up, and you got to see all of our faces for a little longer period of time right now. That's the team that is going to be just bringing great presentations to you today. If you're brand new, get acquainted. And get our SIR Lite. That's free daily information. Matt does a fabulous job on that every day, that's on the S&P 500. If you're on YouTube, do subscribe to the channel, click the notification bell, and give us a thumbs up. And you like the video, that really does help us. And on X, follow us at askSlim. Any questions you have, write to Matt at askSlim.com. This, of course, is the legal slide that we put up. It just says, no matter how we bring you the information, the purpose is for education and entertainment. You should always discuss it with your investment advisor and always do look at your own trading plan. For those of you that are members, remember that Slim AI can help you with your trading plan. Just go talk to it. If you have any questions again on your membership or website issues, write to team@askSlim.com. And any questions on our education, analysis, first-time specials, or upgrades, you can write to Matt. This is the whole team. Remember, you can learn about us by going to askSlim.com. Up on the top, click About askSlim, and then meet the team, and you'll get to see the interviews that we've done, and I think you'll find it interesting. All right, let's get to your questions. Remember that anybody who's in the room that has questions on any of the futures, I'm the one that's going to handle that. If you have any questions on any stocks or any of the ETFs that we look at, then the team will handle that. Also, if you have any questions regarding the indexes, I'm going to present the indexes at the end of the show, so I'm not really going to take any questions that are indexes right now. So I see Ray has got a question up there on a big picture, and Ray, appreciate if you don't get that answer today that you write directly to me, which Ray and I do correspond now and then, then I'll be able to answer that question for you. So on those bigger picker questions for level, our level 4 members, you can ask us. You can write directly to me. All right, so let's get to this analysis. I see there's questions for me in natural gas and in gold, which I will get to both of those, and also on light crude /CL. So I will look at those three and then turn it over to the team, and you'll get a great idea as to how we do approach this analysis. All right, so you can see I have Dow Jones Transportation Average up there, and I'm going to get back to that one in just a little bit and be able to give you our analysis. So let's jump into the gold market. We have been bullish in this market. Our indicators have just remained positive. There was a little tiny dip in here during this correction right there. And you can see in the bottom, the cycle brackets, there's some overlays in here that you can see. That's silver, and that shows you that silver is what we call out of phase with the gold market, which this is the intermediate. There's a more dominant, bigger one right over here, and this is the minor cycle there. So if you look at the minor cycle right over here, look where it bottomed. I mean, that was just spot on, and you could see it was in this uptrend here. And right over here in late July or early August is where the momentum turned up again and gave us that positive signal. So our upside projections have been high. I mean, we've been looking at some higher numbers, and gold has gone right through all of our projections. Right now, you can see this is 37.27. This is 37.46. Now, I've made no secret the fact that I've been a buyer of physical silver and physical gold for a long time and just putting that away into bank vaults. So, and I'm actually bought more this week. So that gives you an idea of my personal opinion on, well, that may be just on fiat. So I'm willing to keep buying this stuff even though it's going up. So this is, the bullish look that you had on the weekly chart. This is a beautiful chart which shows you these translations and the corrective periods here on the gold market. And look at the bottom that occurred right over here. So you could see these nested cycles right over here. It pointed to some low that was coming out into this phase. Actually, this line is jumped over, so I'm just going to move it over here. These were supposed to be on either side of that nested area right there. And then you can see this where this turned positive. So you can see that the slim ribbon PO on the bottom, this is our level 4 indicator, turned green. That's in alignment with the slim ribbon right over here. It's in alignment with the green bars that you see right over here and the green volume bars right over here. For those of you that are using Thinkorswim, you can see how it colors these things to really give you a sense for the conditions. The option bias indicator has been very choppy in here as we went through this long sideways correction here in the gold market. But then once it did break out, either if you use a trend line from that peak across to this peak right there, or coming above this level right over here, which was that past old high, any of those gave you a sense that it was continuing to move through resistances. That kind of blue area right there was the fib extension target, which you could see it got up and through. So all of this has kept it quite positive, all of the indicators positive, and higher prices. So right over here is an important monthly fib extension at that level of the 3740. Again, this dominant weekly extension is 37.29. So you can see all of those look like a good place to expect the gold market to go to as the next target. So that's the look at the gold market. Let's take a look at natural gas /NG. Analysis in here has really been good also. As we had seen it in negative conditions and then getting to a place for the bounce. So let's just put up the weekly for you to see here. Look at, first of all, the harmonics in here, the magnificent harmonic families that show you dominant phases. That's this big one, the half minor or intermediate cycle energies right there, and the quarter or minor cycles in there. So you can see that there's a beautiful alignment on the half cycle right over here and the half cycle right over here. You can see how these quarter cycles are making up the half cycles right there. And we expected that a bottom would form in here. It did form a little bit later than we had anticipated as the ideal. And then when the bottom formed, it formed in this bullish engulfing pattern right over there that you see. You want to look at the value of the candlesticks. This was a bearish dark cloud cover. This was a bearish dark cloud cover right over here. This was this was an unusual upside reversal here in a kicker pattern that had this upside gap and made that bottom. So you could see how the candlesticks can even give you very valuable bottoms. See the quarter where this half cycle and quarter cycle lined up here, and you had the bullish engulfing right over there. Great signals that you can get or help for understanding the cyclical rhythms between the reversal scout that you can see. Look at the quarter cycle, the quarter cycle, that giving you that sense for the rhythm, and the candlesticks and where it fails, its support and resistances. This broke this level right over here, which said it would fail right in here, and it exactly did that. Again, a negatively shaped cycle in here says there's this rally is likely to fail. And if you just look at the dates out over here, this is somewhere out in February next year where it says likely to have some serious downward pressure. So if you extrapolate from here, you could see that we expect a rally and a sell-off and a rally. You can see that coming out to November and then coming out towards year end and then into next year, where all three of them point to the downside. Look at all three of them pointing to the downside here. Look at all three of them pointing to the downside here. What does that tell you? It tells you trouble when you get out next year and that rallies are likely to fail. When you look here at the daily cycles, wow, I mean, really good. The harmonics were minimally lengthened last week. What does that mean? Well, this was running long, and it was telling us that, well, the rhythms that we had in there, the energies as we were seeing them were slightly off. So we make that little adjustment so we understand. And you can see in here what's happening is this improvement as the slim ribbon is now neutral, and that's why this is blue on the bottom right over there, where this is now turned blue right over there. But notice here where the option bias indicator was keeping your option positions biased to the negative side, that has not changed yet. So we're only getting to neutral in here. That doesn't tell us that there's a lot of traction yet on the upside. Right now, looking at the daily chart, you could see that it really does point to probably 30, 50 on the upside in the next few weeks, but it could fall short of that, and it wouldn't be a surprise based on the fact that you still have negative momentum in here on the weekly, which is the dominant force that we're looking at in here. Weekly on the left, daily on the right, beautiful harmonics on the left, on the weekly, beautiful harmonics on the right on the daily. Really want you to go to askSlim.com, top of the website, go to Cycle Analysis Workshop and watch the free video. You'll learn more about cycle analysis right there at no cost to you. So that's a look at natural gas. Now we'll look at CL. CL. We have been extremely negative in the light crude market, and we'll show you why. Now, again, look at the harmonics in here on the weekly chart. Spectacular. Look at the minor half right there where they all three were coming down. Look at that big sell-off. So all three downward pressure are the biggest declines, all three downward pressure over here. Where do you get all three coming to the downside? Well, that's into February of next year. Interesting. That alignment with light crude is what we showed you also in natural gas. So you had this big spike over here, of course, on the tariff news, and where it looked like there was going to be some possible shortage of oil. And then it's come down. You could see the minor cycle right in here. So we're getting into this bottoming phasing right over here, where we would expect that it would find some support. That line is the 78.6% retracement level. Just getting down to that is a bad thing. And it just says that once the low is made in here and it begins to move up, it will likely fail in some resistance level, which will establish once we have the anchor point in there. So this upward spike was not on tariffs. That was on the Israeli-Iran war, where there was fear of the potential shortages. So this is not a good pattern that we're looking at there. Now, if I switch over to the daily chart right over here, you can see that the cyclical patterns in here are also pretty. And there's an important message that we see in here. So once you got this beautiful upward formation right in here, it says that the probabilities are high that the next rally will take out that peak. Of course, that was the Israeli-Iran war spike, and the market couldn't get there. So what happened was that it rallied, failed in resistance, and then got underneath this support zone right over there. And now this cycle right over here is negatively configured. You can see oil falling down right over here, and there is talk of more supply coming out. And of course, now we have the potential for recessions around the world. Europe is in terrible shape. U.S. is showing recessionary signs, and that lowers demand. Demand up, supply up, demand down, supply up, well, prices fall. You can see in here, this points to somewhere out over here in the next few days. I can see I didn't move over the bottoming phase right there, so I'm just going to grab those so that you can see. Right in there would be when we would expect the ideal trough to form. It could form earlier, it could form later. Remember that cycles are flexible. This is a flexible way to understand the market conditions. Many other analysts look at precise numbers, look at precise levels. We look at ranges. We look at ranges in time, ranges in price, because it gives you a much better sense for true market conditions without having expectations of something being absolute. So in this case, we would expect, maybe it could fall down here to 60. We had targets in the low 60s for quite a while. And as you see it coming down here on this daily chart. So we would expect that it would come down in there. It would then, get some kind of a rally phase in here. But remember, this is negative. So then what would happen? Well, it would rally somewhere up over here. And then this would take a hold with the weeklies and it would come down that way. So I'm using the information here of this structure to tell me that this rally will probably not get far and it will move down again. And I'm adding into that this negative momentum here that you can see on the weekly chart. So if this bottom right over here points to somewhere out in October, then you would expect this to point to October, and it certainly does. So you have this cycle here and this cycle here pointing to the downside into October. I can extrapolate out of that you'll get a bottom, you'll get an attempted rally, and then the highest probability, remember this is probabilistic, will be that they fail and move down again into October. That is a look at light crude, and everything that people have asked me about. I'm now going to turn this over to the team, and they can bring you more great analysis.
Okay, let me share my screen and we'll take a look at, first we're going to look at Coinbase Global. Let's zoom in here and let's see. Let me know when you can see the weekly chart of Coinbase Global.
Got it.
Perfect. Okay. So we are inside these blue vertical dashed lines, and those lines represent a period of time right around the ideal cycle trough when we expect the cycle to form a low and then move up into the rising phase of the next cycle. So you can see I have this projection line pointed out basically to next week, and in a minute you'll understand why. And it is finding some support right here in the middle of this support zone at what do we got? 257.97 is the middle of the support zone. So I don't think that it will get much lower than that, although occasionally we do have like a big drop in the very last bit of the timing window. So then I've got this resistance zone here. But you can see that this is a positively configured cycle and it has not violated any important levels. So this is just a starting point. There would be a 78.6% in here and then the cycle peak. And based on the shape of this, that could easily be achieved to levels up here, the cycle peak right around 445 and possibly higher. Right now, however, momentum is negative as shown by this reversal scout. That's this green and purple ribbon. So we want to see that turn green again as this moves up, and that will help us to confirm that intermediate low is in. Over on the daily chart, you can see that both of these were labeled in sync cycles. And what that means is those troughs were due at periods of time that fit within this weekly cycle timing window. And you can see if I zoom back out, this one back here was also in sync, and you can see the weakness that developed. So we have the cycle low timing tracker. It's a tool that some of our members have access to that tracks these cycle lows and when cycles are entering an in sync status, because those often show weakness, like the one that we're currently in, or breakdowns like the one prior. So here is the daily cycle timing window in between these blue vertical dashed lines. And so that is why next week is when we are basically projecting that intermediate trough to form, because this trough is due imminently. So we've retested this cycle low support today. That is the basic projection. Here's another level down, and then the weekly support if there was a throwaway move to the downside. Now momentum is negative. The reversal scout just turned negative again today based on this down move, and our slim ribbon is also negative. The next one that I wanted to take a look at was yesterday. We had a request for Google on the monthly chart. Now, you can see here is our Google monthly chart. And about 6 weeks ago, I put this in 715 investigating a 30-bar cycle. That's this blue dashed cycle. Many of the tech stocks formed lows right here. So I suspect that this is the one. But regardless of that, they are both in a rising phase, and you can see the strength of this move to the upside. So we've gotten through the 78.6% extension this month, and the next level up is the 100% extension at 255.63. I keep raising these supports. The timing window, if we are working with this shorter cycle, would be out here in October, November of 2026 as an ideal. This larger one isn't until the same time the following year, 2027. So we will probably be adopting this cycle just based on some of the action in the other tech stocks. Over on the weekly chart, you can see the strength of that move. So this was that April of 2025, and that would correspond to this low right here on the monthly chart. And we've got very powerful momentum. I keep having to raise these supports. Here's that monthly extension, the monthly 100% extension level. We do have a timing window coming out October 13th of 25 through November 21st of 25. So if we get a nice pullback in here, then that might set up a good buying opportunity, provided that we don't get a severe retracement. A nice buying opportunity out into the early part of 2026. And the other one that I was going to look at is Amazon on the monthly chart. Here is Amazon had formed a minor cycle low right there, right on time. And I had originally, based on the depth of this and the sharpness of it, projected back up to right around this area around 225. But momentum has returned to positive now, and this is showing a lot of strength. So perhaps we get a retest of this level, 242.52. The next level up from there is the long-term 161.8% extension at around 281. We do not expect a trough until the beginning of 2027. Over on the weekly chart, you can see this nice move up. We're moving a little bit sideways now, coming towards this weekly cycle timing window. Again, that is the October through early December timeframe. Here is that prior cycle peak. Looks like we're going to make an attempt for that and then get the nice retracement here. And then that could set up, again, a good buying opportunity out into the beginning part of next year. I believe that that was all that I have, so I'll turn it back over to you guys.
Okay, Arby, you have anything?
Nope, I didn't get anything, which is okay. But I had
Okay.
all of my
Well,
charts on Thursday, so
yeah. Well, those of you that, miss having Arby's work, you got to see his trade ideas. I mean, they have been just spectacular. He has got, I can't even say it out loud over here, but his directional decisions are probably unmatched anywhere. When you look at his trade ideas, picking those directions, he's fantastic. So take a look at our trade ideas. That's it for our questions and comments for today. All right, we're going to turn this over to Matt. He's got day trader to show you, plus our special for level 3.
All right, thanks, Slim. Great work, team. Okay, I'm going to share my screen here. You should see the homepage of askSlim. For those of you that are new to askSlim, just want to give a very brief review of who we are, and then I'm going to step you through a couple of the market week specials that we have to announce today. So first things first, I'm on the homepage right now, and we provide technical analysis, trade planning tools, and comprehensive education for various trading styles. We have actually 5 membership levels. I'm going to jump over to the membership area. So we have membership levels that are 1 through 4. We call that our core membership levels. Those are focused on a deep dive into technical analysis, where we bring you cycle analysis, momentum studies, and Fibonacci swing high, swing low techniques. And in level 1, there's a primary focus in mostly the indexes and major ETFs. And then as you go further out into our memberships, level 2, level 3, level 4, what happens is you'll get an expansion in the amount of coverage that we do in terms of markets, in terms of stocks, ETFs. And then as you get into, and then our video library comes into play in level 2. And then in level 3 and level 4 is where you get access to many of our automated tools. As Slim mentioned, we have a market conditions monitor, which he's going to demo a little bit. And then in level 4 is where you get to have access to our Thinkorswim charts. That's our all-in package. And what that means is that if you do have Thinkorswim or Thinkorswim, and you were considering getting it, you'll be able to import our charts directly into your own platform. And so those charts that you are watching us present off of today would be the same ones you'd get to open up on your own platforms, and also get access to our indicators that we have as custom and proprietary. And then finally, we have a dedicated day trader service, which is focused on intraday swing frameworks. So we have done multiple upgrades since we launched this in November of 2023. It is an amazing service, comprehensive deep dive into the world of intraday swing trading. And I'm going to jump over now to the specials that we have going on. And we have 2 we like to call them market week specials. And we have one for the day trader service. So with the day trader service right now, you can get 25% off your first 3 months. It's only $99. That includes a 14-day satisfaction assurance. So that allows you to try it risk-free. We're very confident in what we bring to the table regarding this service, the education that you're going to receive, the tools that you'll get access to in terms of standalone tools, as well as we have multiple live Zoom cockpits, we call them, where you get to see the setup layouts that the team has put together. And we are extremely well versed in how those operate, how those work. There is a huge resource library that we offer for our day trader service, and those run live on Zoom. So if there are questions that you have, you can always message on there, and I will respond to those as quickly as I can. Again, you can try it risk-free. It's $99, 25% off. And I have done last week, I did a over 2-hour walkthrough and live trade planning review of the services. So on this page here, if you scroll down and want to learn more, you can watch that video. There's chapters that you can skip through to find certain areas that you might have an interest in. So I'd recommend that you do that. And I'll be doing more live events as we go, in particular tactical and strategic events for our members. So if you do become a member, you'll have access to those live events and, again, the resources that come with the service. That is our day trader offer that we have going. It's, I think, for the price, is quite amazing in terms of the depth and the live interaction that you're going to get with the services as well as the team through Zoom. Okay, level 3. So level 3 is part of our core membership. That's when you start to get deeper into an expansion of the number of symbols that we do, and you get to see our analysis in action. So we have automated tools such as the ranking system, where you can go in and look at our focus list. We have over 85 symbols, and you can sort basically instantaneously to see how our algorithms are looking at the market outlook for approximately the next 3 to 6 weeks in terms of the bias. We're very focused on helping you determine and define what bias means for your particular trading style and outlook period. So our tools are very geared around that process. And level 3 just has so many different features that I did a walkthrough on that one as well. So you can click on that on this link here, and that would take you into I think it was a couple-hour walkthrough on level 3. Obviously, you don't have to watch the whole thing. You can put it at 2x speed, or you can find different areas that you have an interest in. Bottom line is there's a tremendous amount of information that is designed to help you be a more sophisticated swing trader. We produce analysis that allows you to project in time, price, and then most importantly, what is that directional bias? Because that directional bias is what should drive your overall position bias. So level 3, right now we have 3 months. This is for new members, 35% off, quite a savings. So you can take advantage of that level 3 offer. Also, as part of level 3, you get access to RV's office hours. So that means that you can sample, and I'll pull this up, and his trade ideas, as Slim was mentioning. So on our Discord channel, which is only for our premium members, RV posts trade ideas in there. And then there is a trade ideas, there's the feed. And this is where not only does he post trade ideas, but he'll call out things that he's seeing. So it's almost like a real-time blog, market blog that RV produces on a daily basis. And you can interact with RV through the trade ideas Q&A. Like today, he posted just some thoughts around the status of the market. So you really get an immersive opportunity as well as an interactive opportunity with the professional analyst team here at askSlim. Katie also has an options Q&A channel on Discord. So if you have questions regarding option strategies, if you're new to option strategies, or you're looking to expand your techniques when it comes to options, Katie is an absolute expert in that. So you could message her there. And again, this is a premium only Discord channel. So if you're level 1 through 4, you get access to it. But then the higher level you are, there's more channels that are available, like the trade ideas feed. Again, if you have more And if you want more information, you want to learn more, you can watch those walkthrough videos, or you can reach out to me directly at matt@askSlim.com. And we are excited to have you join our community and look forward to that opportunity to connect with you. That's it for today. Back to you, Slim.
Okay, great stuff. Really great to see that. And I know that if they watch those walkthroughs videos, they're going to just learn a ton. So absolutely great. Thanks for that, Matt.
Yep.
All right, stock market analysis and projection, important information. I know many of you have been waiting for this, or if you're watching on YouTube, you might have scrolled up to this point. So we're about to bring you a tremendous learning opportunity right now regarding how we approach the markets and what the current conditions of the markets are. And I think you're going to enjoy it. First, of course, this talks about our approach to the analysis and what it means for you, and the important aspect of trade ownership. You must own your own trades. You must then handle your own risk management, no matter where the information comes from. All right, this is the market brief for this week. Well, stocks certainly choppy. They fell early and jumped in midweek on an interest rate drop and AI news. And then Friday, we saw more to the upside and a failure as the markets were up very significant early on and then fell quite hard. We saw S&Ps up over 30, down more than 40. And now here we are at midday. And we have the S&P 500 down 37 points. So the market certainly has turned weaker. But I'll show you what that means. Interest rates, well, they fell sharply. We had seen the bond markets really moving downward. In other words, interest rates moving upward in Europe. And that had affected our markets here, but then the interest rate market really moved to the downside. And the analysis that we've had has really shown that that was likely to happen. So this is based on the information that's coming out on the economy turning much weaker. September rate cut is now, I think it's totally likely. I mean, it's probably now we're looking at another rate cut after September. Tariffs, well, here we are. They're in question as the court rules that they are invalidated. This is likely headed to the Supreme Court, and they're pushing to get it there fast, but we may not know about the condition of tariffs for some months. Alphabet Apple news was pretty interesting because the judge came out and dismissed the monopoly case from the FTC that they were a monopoly, and Alphabet had a big jump. Now, you'd say, well, why does it matter? I mean, so they get to stay the same as they've been. However, Alphabet has been trading at a discount to the techs, and it made up some of that discount on the upside as that news came out. And Apple then will continue to receive payments from Alphabet based on that news. So Apple also moved to the upside. Those did help the market midweek. AI stocks, though, are mixed for the week. This is really important. NVIDIA, which of course has had control of that market, is 8% of the S&P 500. News came out today that Broadcom, that's AVGO, they have huge demand for their chips, and they are making ground. They're gaining market share on NVIDIA. So if NVIDIA turns weak because they're no longer the leader in the chips, and something like Broadcom gets stronger, well, you can figure out the math. NVIDIA is 8% of the S&P 500 going down. Broadcom is 2.7% of the S&P going up. Well, that puts a weight on the stock market. And we actually see that today as NVIDIA has turned to the downside. The jobs report, well, we had 22,000 jobs created, if you believe any of the bull crap that comes out of the BLS. And that was versus an expected 75,000 jobs. And June revised down to a loss of 16K. Because you can't believe what they said originally. And that shows a really significant slowing in the job market. And just more information on top of like the ISM that's been in contraction, for the last 6 months. So U3 has popped up to 4.3%. So make what you will of those numbers, because we have been shown that none of them are real. Indexes, well, narrowly mixed on the week. Down early, rallied, came back down. NASDAQ and Russell, as of my last reading at noon Eastern time, were up small. The S&P 500 and the diamonds down small. So we get this mixed narrow week and a lot of chop. And though we did move out of the range that we've been in for a few weeks, it really wasn't able to hold that. So we're going to look at the charts moving forward. So that's what's going on this week and what just some of the market moving events were. Now let's look at the stock market. We're going to start out in the Dow Jones Transportation Average because it gives me an opportunity to do some more teaching, and then we'll move more quickly through the other indexes. We'll look at multiple time frame analysis and projections. Of course, this is all probabilistic analysis, where we look at what the highest probabilities are based on the market energies and all of the tools that we bring into this with our proprietary indicators. And I'll show you the market condition monitor. So we'll look at all of this stuff. Let's take a look as I switch over now to the Dow Jones Transportation Average. I want to do this because it allows some teaching and a little bit of a different way to look at it. Let's take a look here at the weekly here. So this is just your standard, candlestick chart with our reversal scout on there, which you can see is a good way to look at what the directional forces are. And the reversal scout is really helpful to us when we look at doing cycle analysis. Now let's switch over to the weekly with a ton of information on here with our analysis that's on there. And all of a sudden, these cycles just absolutely pop out at you. This is a little different because I have the green rising phases where they start with these green ovals, and then the declining or corrective phases where the yellow ovals are, so that you can get a sense for this energetic movement in there. And then I have some support and resistances in there to help you. So you can see that this bottom bracket, which is just a drawing tool, is set at 15 bars. Where does that come from? Well, it comes from me visualizing, or this is observational, of where the significant troughs are. You see our very astute team doing the same thing, where they look at this visual type, observational type analysis, and then bring in the important information that they can so that they can take that information and project. So where are we right now? Let's just look at these next few cycles right in here. We see that a bottom came in here. Remember, this is the range of time that we expected that trough would come right there, and it came pretty much on the ideal. And then you got into this next rally phase. Now, you see this upward arrow pointing here? This upward arrow is here because it's telling you that the probabilistic analysis based on the shape tells us that this next rising phase is likely to threaten this peak. Now, I could have other upside levels in there based on extrapolating from this cycle where the fib extensions are, and they would be higher levels up over here. And I could have this resistance level in here at 69, at 16.9, or this one up here at 17,875. Those are all important levels. But for right now, I just want you to get a sense of the energies. That's why I'm showing this to you this way without a lot of other projections that are in there. The next thing that I want to do is now compare the daily information and how you can extrapolate the weekly information into the daily. And what I'm going to do now is bring in that daily analysis right here. And this is a little different way to look at it, because what I've done is I have put in these what I call cycle trend schematics that are in here, essentially showing you the weekly cycle and how the daily cycles act inside of the weekly cycle. So the forces from the daily cycle, as you see right over here, are affected by the weekly cycle. right in here. They're pushing up right in here. The daily is pushing up right in here. And that's this rising phase right over here on the weekly chart. So you can see in here this weekly cycle, it's shaped in a bullish way because this cycle was shaped in a bullish way. So the schematic is showing you the weekly cycle here and the daily ones embedded into it so that you could see all that action. And of course, when the weekly and the daily are coming down together is the greatest force on the downside, and that's what you got. So let's just zoom in right over here so that you could see the beginning of this next schematic right over here. So what I'm showing you is that this cycle, this minor third, as you can see right in here, is coming down, but it's really in a place where you would expect that you would be getting a bottom in there. If that's the case, this is likely to turn up and then get up to the resistance level or through the resistance level. So this is a positive occurrence, and it's telling me that the weekly part of this schematic is likely to continue on the upside. So I can just kind of draw this out a little bit further and say, well, it's pretty likely that that next cycle right over there is going to do something like this, get above that high over there, have continued rally, test that other high, and then when that's over with, come down in some way over here. And if this is still forming bullishly, then it's going to tell me the weekly cycle is still bullish. So this is like a cycle analysis lesson that I'm giving you here that I think is very important for you to understand how the messages from the different time frames work with each other and how you learn these conditions. Please do go to askSlim.com. Go to the top of the web page, the Cycle Analysis Workshop, and then you can watch that video, and even on the bottom right is Slim AI, and you can ask some questions about it, and it'll help you understand it even more. So I wanted to give you this lesson. Dow Jones Transportation Average still pointing upward right over here. Momentum pointing upward here. We have the Slim Ribbon PO green and soon to give you an upside arrow. Look at the upside arrows right over here telling you upside resumption. And here you could see the option bias indicator is neutral. It's yellow, and that's because you have this, sideways chop that's going on right over here. It's not giving you much other than saying, well, maybe you can be selling strangles or straddles because, it's kind of in a place where it's not really moving. So you could see there's tremendous value in doing this type of analysis. And I wanted to give you that lesson. Right now, it's pointing to the upside, and the stock market outside of the Friday reversal here has been pointing to the upside. So we're going to jump into the Russell, the S&P 500 with some updated cycle analysis in there, the NASDAQ and the VIX. That's what we're going to look at next. And then we'll take a look at this market condition monitor in just a few minutes. So let's switch over now and look at the Russell. Why am I starting at the Russell? Because the Russell's patterns are out of phase with the rest of the market. The cycle analysis that's in right over here, and you can see the little schematic that I put in here also, so you get a sense of the weekly and daily trend. This is giving you the sense for the upside movement in here. Now, I wanted to put in the kind of that tactical look right over there. As you could see, these 15 bar cycles that are in there, and they have affected the other indexes, and I'll show that to you in a moment. Weekly moving up, upside projections up here to 2417 to 2467. And now if I just switch this over to the normal daily look right over here, you can see that what we're looking for is this cycle right in here to give you a little bit of a pullback here for a few days. This is the S&P 500 revision, which is running a little bit longer than what the normal cycles had been, which had been around 18 to 22. This is set at 23 because that's where it's been averaging now. So we're looking for a little bit of a downside here and then moving up again. This is in alignment with the strength that we see here. Look at the option bias indicator on the bottom, keeping you on the bullish side. Here's where that upside reversal came right there. Wow, talk about timely as that kept you here. Remember, Slim Ribbon is a free indicator. Slim Ribbon PO is a level 4 indicator, available at level 4 for Thinkorswim. So we're looking for a little pullback in here over the next few days and then moving to the upside. So how does that look when you look at the S&P 500? Let's go to the daily right over here. And you can see that, well, look at the S&P 500. Now, this is revised. We had multiple cycle patterns on here that were looking at how the Russell was affecting it, how the equal weight RSP was affecting it. And now, once we got this low, which we thought would be a few days later and might line up with this, it actually told us differently. And now you could see how the shapes are giving us important information. So this low over here is an anchor point that some people might look at and say, well, that really wasn't the low. This was the low, but on great occasion, you get a testing or a secondary low that actually makes that cycle low. And all truth is that I didn't give that a lot of credence until I saw how these shapes were forming, and it would have helped me to do so. I've had some conversations with some other members and explaining this, and you could see there's all of a sudden a pretty wide variance in what these cycle rhythms are, even though the rhythms are clear, and they're averaging around 23 days right now. This one was 22 days, this one was a long 27 days, and this one was, 19 days. So it's 19 and 27 is 46. Half of that is 23, and that's how these averages come out. So what does this say right now? Well, this is saying that it's pointing upward. I'm a little concerned by that reversal right there that we had today, but this is early. If it breaks down under this level, that support right over there is 63.60.58. That's where that cycle low formed. If it gets under there, well, it says that the weekly peak is in place. Remember, when I did this lesson on the Dow Jones Transportations a few minutes ago, we were talking about how the information works from one time frame to the next. Here's your weekly upside push. Here's the reversal scout giving you that move. This incredible translation where that was your minor trough right over there. Here's your minor weekly trough. Here's where it all of a sudden, in a very pretty way, aligned right over there where I was confused about it before. So I'm glad that that has clarity for me now. And we're looking at this 23 bar cycle moving to the upside, being pushed up by this. If this cycle low gets broken at roughly 63.60, it will tell me that the probabilities are that this weekly upside cycle has peaked. Until then, it's bullish. We have bullish option bias study, bullish slim ribbon PO, bullish cycle formations in here, upward translation, positive translation that says the next cycle will make a higher high, which it actually did already. And the weekly patterns bullish. Everything is bullish, all pointed to the upside. I'll show you the MCM in a few minutes. It's all still bullish. The only little bit of caution is that we have this reversal here today, and the fact that valuations are far beyond anything we've seen before historically, and that's going to make for a lot of volatility. And I'll add in one more piece that I showed a week ago, and that is the shorts in volatility are near a record. There's so much complacency, it's crazy. And volatility is going to come back based on that. So that's the S&P 500. Here is the NASDAQ right over here, and we'll look at it the same way. And you can see this cycle right over here at 23 bars. And this one was far clearer, as the shape of it was nice because the NASDAQ was much weaker. And you could see where it bottomed right over there. Look at the bottom here. This one a little bit off because this was too short. This one right on. Here is your Russell as it overlays in here. We'll wonder if that little Russell decline that I showed you is going to get this to pull down but not break the low, and then they all move up together again. That's a possibility. We could get into a chop right over here that we see. And again, the NASDAQ could turn weaker just because NVIDIA looks like there's a challenge to it right now. This all is still positive weekly formation here, pointing up here. Well, this resistance level that it's backed off from right there is at around 23,950. We'll call that there. There's another one here at 23,270, and this monthly one at 24,500. It could get there, but I have doubts it'll get through. And again, valuation is a concern, but everything that we're still looking at here is positive. And the next one we'll look at is the VIX, VIX. So the point that I made and have been making is that the VIX, implied volatilities, are in an area where they should bottom. And we started to see some upside moves here on the weekly chart, but they haven't really gotten anywhere yet. Now, the market, of course, is at an all-time high, and complacency is also at a really high amount based on the amount of shorts that we see out there in implied volatility. People think it's perfectly fine to be short puts, short calls, but when the market starts to get nervous and they begin to buy insurance by reaching for puts, implied volatilities jump. Right over here, you could see that we're in this, what I believe to be the rising phase of this cycle. And look at when you get into these rising phases, that's got you up to about 30. This got you up to about 30. This was up here around 30 also. This was actually 28. This was 30. This was 60 up over there. And we're going to get some upside moves and implied volatility into the 30s or beyond here in coming weeks, maybe coming months. So this says to me, expect to see good movement on the upside. When I look at the daily in here, there's actually two overlapping cycles in here that look interesting. They both look to me like they are valid. And right now where we are is that we're here where we started to get some upside ticks in this rising phases right over here. And again, this says to me, in this rising phase on the weekly, in this rising phase on the daily, it is pretty likely that this market's going to get a lot choppier, and we're going to see swings like today where, the market tries to get up and all of a sudden the S&P is reversed by 70 or 100 points, or we get some big downside days. So the big downside days are more likely to come when you get all of the indexes falling together, which we actually have not been able to do mostly. We had one day where they kind of fell down together, and that made this cycle low. So as long as you see, the one day the Dow going down, the S&P going up, they're not all going down together, we're still in the rotation. And the rotation has been positive because money comes into one index and moves a little bit out of another index and comes back into the other index. So all of that rotation has been positive. It will take days where you get 2,000 declines and you get all of the indexes falling, and of course bids coming in for puts and the VIX going up to get any real downside movement and to turn this market down. Until that happens, this market is still bullish. I'm going to look at our market condition monitor and see those conditions right in here, and you will see where we are right now. So I'm looking at short term. And the short term is just looking at, potentially a few weeks. And you can see in here that the indexes are very bullish or bullish as we look at them. So this has all been really valuable. If I look here at the intermediate, okay, this takes into the weekly and the monthly conditions, they're all very bullish, or the QQQ, which has been a little bit sloppier, is bullish, not very bullish, but you can see they're all bullish. For those of you that are near term, just a few days, you can see in here, well, they're mixed. And here the IWM, which has been somewhat the strongest, is still bullish, but the rest of the index is neutral. And for those of you that are level 4 members and get our intraday or, get our day trader information, you can see in here that, well, this is all neutral. It tried to get up, it couldn't get up, it came down. And for the intraday conditions right now, we're at neutral. Let's go back to the short term and just look at the some of the stocks and get a sense for which ones are very bullish. And I'm going to scroll down here slowly so you can get an idea in here of which ones are reading very bullish on the short term. That's for the next few weeks, couple weeks. These are the ones that are reading very bullish. Remember, this has our algorithms built into it. It's fantastic, and you can get notified when any of these things change for level 3 and 4 members by downloading our alert application. It's a desktop application, and when something changes and you want to get alerted, it will then give you an alert that comes up on your computer. So fantastic. Let's look at the ones that are very bearish in here, and you'll get a sense for what's happening when you look at these. CrowdStrike, that's one of them that's really gotten hammered. Of course, we have UPS and all of the problems with tariffs and slowdown in the economy that are affecting that. And I'll move down in here and you'll get, there's another one, FDX right along with it. And I'll come down here. Boy, MicroStrategy, very bearish that you see there. And where somebody had asked me earlier on in the show for analysis on the that I saw on the cryptocurrencies, and I didn't catch that before we moved on. So I'm sorry if I did miss that, but we've been negative on MicroStrategy, and I believe that that company is in a lot of trouble. I also believe that about Bitcoin, though they're in areas now where they could be making a temporary bottom when you look at Bitcoin or you look at Ethereum. But I think MicroStrategy's got a lot of problems because I think one of the legs that has held Bitcoin up, and this is Saylor's company called Strategy now, is one of the largest holders of Bitcoin, and Ethereum is the company that all of the money movement around the world is likely to be built on. And if you had any sense that that was going to be the purpose of Bitcoin, well, I believe that is over with. And I believe Bitcoin is going to be a lot lower in the coming year and year after, of course, some attempt to the upside because the bulls are still out there. So I'm sorry I missed putting up that analysis, but you can get a sense in here for the very bearish stocks that are in there. Target, Deere, Kava. Boy, I don't like their food. Kava. And that's it, looking at that. So I hope that was extremely valuable to you. Don't go away because now that I've showed you the market condition monitor, I want you to see something really quickly. Look at this. Matt took you through our day trader, and this is the day trader cockpit 2 that I'm showing you right now. And I just want you to get a peek at how this signal changes to you when it was bullish right over here, and then all of a sudden it started to turn down. As you see, you got this heavy selling indicator right there in the 3-minute, the heavy selling right over there in the 8-minute. It put you in a trade that was absolutely phenomenal, that for a scalper or for really short-term swing traders in the indexes, this is the ES, this is the NQ on our cockpit 2, really put you into a fantastic trade. You could get the day trader service for just $99 for 3 months. And not only that, we have a 14-day guarantee on there. So if you don't like it, just write to us and you're out of it. No problem. You don't have to stay. That's just a tremendous amount of information that you're going to get. Go back and watch what Matt had told you, or go onto the day trader on our site. There's a 2-hour and something webinar in there that Matt did that's fantastic, that teaches you about how to use the system, all of the great things that are in our cockpit with our new trader radar, and all of the information for futures on top of our normal cockpit that has our impulse monitor in there, as you could see right over here, where it tells you each of those 4 indexes and what the conditions are, and when heavy buying or heavy selling comes in, the turbo goes on. It's fantastic. So just write to Matt at askSlim.com and he will then answer your questions, or go to the website up over the top of the right on the front page and click that, and you can get the information right there. And there is a link there for the webinar, so you can watch it. And also we have a special for our level 3 members also. If you're not a day trader, you're going to love that. If you're new, well, go to askSlim.com and start learning from this team of pros. Education analysis for traders and investors, and get ready for mind-blowing new content as we keep bringing this stuff on. Team, we're done.
Great work, everyone.
Yeah.
Nice work.
Awesome
was a
job.
lot of fun.
Yep.
Really good. Really good.
Yeah, thanks. All right, everybody. We'll see you soon.